Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. We are live. It is Rapid Fire Friday. We are going to try to get to as many of your calls and questions as possible today. Our phone lines are already open. So if you want to be the first caller in the queue, the number is 610-363-1110. Well, Financial Issues, if you're tuning in for the first time, is a ministry that helps to educate people about financial issues from a biblical worldview. We encourage our listeners from advice from the scriptures about all things stewardship, and we give you a very practical way that you can show that you believe that God owns everything, by honoring him in the way that you invest your money. So that's our specialty here. That's what we like to talk about. We talk about what's happening in the markets and the economy and encourage you to adopt a biblically responsible investment strategy that we put together turnkey for you when you become a partner for just $132 a year. You can find out more information about that partnership on our website, financialissues.org. While you're there, especially if you are a partner, we did have a partner conference call yesterday. I'm not sure if we have the call posted yet. We're just waiting on compliance approval. I do believe if it hasn't been posted, check back here shortly. Hopefully over the weekend you can listen to it before our little blackout period on Monday and Tuesday when the website is going to go down. I think it was a great partner conference call. At least that's what Pastor John told me. So I hope you enjoyed Bible study with him this morning and that you'll go listen to the partner conference call if you did indeed miss it. So on today's show, we of course are going to get to your calls and questions. 610-363-1110. We'll get you in the know with the most relevant economic and market information happening this week. And of course, we'll get some encouragement from the scriptures from Matthew 19:17. That's where we'll be today. So at Financial Issues, we help you stay in the know about the financial issues of the day. We help keep you abreast of what is happening in the economy and the markets and help you understand how that impacts your own personal financial issues. So the takeaways that I have from today, which of course is March the 21st, I believe yesterday was the official first day of spring. So the markets seem to be okay with the Fed's dot plot that seemed to spell out their outlook for transitory stagflation. For the week, the markets are indicating that they will be a little bit mixed. So week to date, the Dow is up, the best performer, up 1.22%. Week to date, the S&P is up a little over 0.5%. It managed to eke its way out of correction territory this week after briefly dropping into correction territory. The NASDAQ, after a super volatile week, including a 2.5% drop, followed by a 2.5% recovery, is sitting slightly positive week to date at almost 0.2%, but it is still officially in correction territory, down more than 10% from its most recent highs. The pre-markets are indicating a negative open. We'll keep an eye on that. You never know. Sometimes it pans out that way. Sometimes things change throughout the day in this world of this day and age of fast-moving news. We never know exactly what we're going to hear about today that's going to cause the markets to move one way or another. Biggest news this week. So the Fed keeps rates steady, just as almost everyone suspected that they would. Here is Jay Powell on Wednesday announcing their interest rate decision and brief conclusion about the overall economy that the FOMC came to a consensus on supporting their decision to leave the benchmark federal funds rate unchanged at a rate of 4.25% to 4.5%. Watch this.
The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet.
So you just heard him say the Fed still expects to make 2 rate cuts totaling, well, you didn't hear him say that, but he did say that the Fed expects to make 2 rate cuts totaling 50 basis points this year. Most of the economic community expects those rate cuts to come late in the year, maybe even by December. So 50 basis points is half of what they originally projected. So in spite of predicting that inflation is going to rise and growth to wane. So it looks like we will have 3 years to get to the full 100 basis point cuts that the Fed originally projected to come by the end of this year. That's what their dot plots show, that they're going to get to those 100 basis point cuts originally expected, but not for about 3 years. So Powell admits there is much uncertainty about the impact that Trumponomics is going to make on the economy, along with just about everybody else. I get it. There's a lot of moving parts. There's the tax cuts, there's tariffs, there's government regulation, there's all kind of things, geopolitical things that are happening. Energy policy changes, DOGE, all of that stuff is going to weigh in, and it's a plan with a lot of moving parts. Finally, tariffs, which Powell even says he expects will be inflationary. Watch this.
Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
So Powell revived that one word that I thought he might never utter again. Transitory. Remember that one? The inflation that we experienced post-COVID put a time frame to transitory that didn't meet most anyone's definition of transitory. The inflation that we saw post-COVID was expected to be transitory, running above the consistently below 2% level that it maintained for most of the previous decade pre-COVID. But it ended up lasting. The transitory period of higher inflation ended up lasting almost 3 years and still hasn't returned to pre-COVID levels, according to some measures. According to the Federal Reserve Summary of Economic Projections, which they did release at this last meeting, particularly the dot plots and inflation forecast from early 2021, the Fed expected inflation to be short-lived and return close to its target in just 1.5 years. According to the dot plot, the S&P that was released in March of 2021, the Fed laid out their expectations for PCE to be 2.4% by the end of 21, 2%, that target, by the end of 2022. Reality check, though, the expected 2.4% inflation read by year-end 2021 was actually 5.8%. A big miss for the FOMC. They missed it by 100%. 2022's expected return to the 2% long-term target for PCE was even further off the mark, or the dot, coming in at 5% in reality. 2023 PCE inflation is still 100 basis points higher than the FOMC's predicted 2.1%, sitting at about 3.1. So while the Fed initially forecast inflation to rise briefly and transitorily in 2021 and fall near target by the end of 2022, it remained elevated for over 2 years longer than projected in their dot plot. So we just kind of have to take those with a grain of salt. Trump's reaction: President Trump on Wednesday after the FOMC meeting and press conference urged the Federal Reserve to cut rates to help ease his tariff policy. Trump posted on Truth Social this: the Fed would be much better off cutting rates months as UF tariffs start to ease their way into the economy. Do the right thing. April 2nd is Liberation Day in America. Well, April 2nd is the day that Trump plans to roll out the next phase of his trade policy, including reciprocal tariffs. So is Trump right? Is inflation over? Well, egg prices are coming down quickly. As of late Thursday morning, prices had fallen further to just above the $3 mark, according to USDA data. This comes just weeks after wholesale egg prices reached a record $8.17 a dozen on March 3rd, largely due to the supply shortage caused by the bird flu. Got a little bit more to share with you here. Hope to get it all in that first segment, but didn't quite do it. Stick around. I'm going to finish up my thoughts here, and then we'll get to your calls. You can be the first caller in the queue. 610-363-1110. I'm your host, Shana Burt. We'll be right back.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
In a time when children are facing unprecedented challenges, the gospel stands as the greatest source of hope. At Crossroads Kids Club, we have the incredible opportunity to bring the message of Jesus into public schools nationwide. Join us in sharing the life-changing hope of the gospel with the next generation. The need is urgent, but God's love is powerful. Together, we can offer Christ's love to children who are longing for it. To join us, visit reachOurSchools.com. That's reachOurSchools.com.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for sticking around. Hey, our phone lines are open. We do have the full hour of the live show today, and we'll have the phone lines open for a little while. But don't wait till the last minute. 610-363-1110 is the phone number that you dial to ask your question.
But waiting for the last minute makes it so much more exciting, Shannon, doesn't it? Makes it spicy.
It does make it spicy, but then you increase your risk a lot of not being able to get in at all. And, you know, one of the things that we're all about here is risk management. So
there you go.
Manage your risk. Call in early. 610-363-1110 is the number there. Let me pick up my thoughts back here. We're talking about the Fed earlier, their decision to leave rates the same, which was totally expected. And then we're digging a little bit into the details and the dot plot here. So inflation is starting to fall. We took a look at egg prices. They're down pretty dramatically. But what was noted by the USDA in this same report that I was talking about just before the break was that the fall in egg prices have not yet been reflected in the retail market. So remember, wholesale is what is what the retailers buy it for. So the grocery stores pay the wholesale price to get the products. They mark them up. They sell them to the public for retail. Those are the prices that we pay. So one of the things that were noted in that report was that the wholesale prices were down, but the retail prices hadn't moved as much. That could potentially be a problem for food retailers if they don't pass along those savings. You know, there's been calls already. I saw a call for the FDA to investigate certain companies that don't seem to be passing along the savings. I don't know if that's going to be as big of a threat under a Trump administration as it would have been under the Biden administration, because remember, or a Kamala administration. Thank God we dodged that bullet. Remember, she was talking about price fixing and, price gouging and all of those kind of things. So you can definitely bet that this would be something that a Kamala administration would have been investigating. But the egg market is also pretty fluid. You know, consumers have a choice. They don't have to have eggs. So when egg prices got really high, we started to see some of the consumer demand falling off. So retailers risk a few things if they don't pass that along. Another big inflation component, gas prices fall below $3 a gallon in most states. In a lot of states right now. On Monday, the White House celebrated that most states' gasoline prices have fallen below that $3 mark. The same day, the national gas average was hovering just above the $3 mark, but it was 42 cents lower than it was just a year ago. So yesterday afternoon, prices were around $3.12 a gallon. Panning out to the bigger picture, oil prices in general are down 14% since Trump took office. And a new inflation report from Trueflation suggests that real-time inflation, keep in mind that the numbers that we get reported have sort of a lag. They are looking back at, the last 30 days. We're about to get PCE again next week, so that read is a little bit older. But Trueflation tracks 30 million items that consumers buy on a real-time basis versus the CPI that only tracks about 880,000. So 30 million versus less than a million items. I think you probably are going to get a more accurate read from that Trueflation number. And it has pretty well tracked the CPI read for a while, with a few exceptions, like when inflation was at the peak, and now maybe as inflation is bottoming out. So their Trueflation read on real-time inflation is now actually, you ready for this, 1.35%. So lots of moving pieces. We've got the tax cuts. Tax cuts could be slightly inflationary. If they are expanding, if we're just renewing the 2017, no changes, there's no changes there. I mean, it's pretty much the status quo. But if we get these things like no taxes on Social Security, no taxes on tips, no taxes on overtime, that could potentially put more money into consumer pockets, which is a good thing. But some say that it could be a little bit inflationary because, again, you have more dollars chasing either the same or fewer goods. Extending the 2017 tax cuts, again, has no immediate impact because it's just business as usual. It's if we get these additional cuts that getting a battery low on the thing over there. So sorry about that, guys. Probably there would be a delay in seeing these things work their way into the system. So if we get these additional cuts for Social Security, no tax on Social Security, overtime, and tips, that wouldn't likely start until 2026. So we still got the rest of 2025 to go. That's factored in, or isn't going to change. It's the tax cuts don't expire till the end of this year. So those new tax cuts, if they get passed, will probably come in just at about the right time when inflation is settling back down and higher tariffs potentially replace tax revenue. So if all of these moving pieces work in sync and everything comes out right, we're going to see a big, beautiful economy. And I think Trump will be very, very proud of. In fact, Treasury Secretary Scott Bessent has said that the White House is more focused on bringing down the 10-year Treasury yield. Trump's very focused on telling Jay Powell what to do and to lower rates, but Treasury Secretary Scott Bessent is more focused on those longer-term rates because one of the biggest problems is in housing right now. It's really unaffordable. Housing prices have increased a lot. Interest rates are at highs. So seeing the long end, which the Fed doesn't directly control, seeing that long end come down would help mortgage rates come down, which would help housing cost improve. So this is the topic that I see as the biggest deal emerging from the FOMC decisions telegraphed this week. It's not the rate cuts. It's not the inflation predictions. It's not the growth predictions. It's what they said about quantitative tightening. Even though the Fed did not ease monetary conditions with rate cuts, they used their other tool to ease conditions. The Fed announced that it is cutting the Treasury portion of quantitative tightening to almost nothing. They're lowering it from $25 billion that they were allowing to roll off their balance sheet, treasuries that they were allowing to mature and basically get off their books at a pace of $25 billion. They've now reduced that to $5 billion a month. This is an easing move that I think Secretary Bessent will be really pleased about, because depending on how this plays out, we could see those long rates hold steady or come down a little bit, which would help to flatten out that interest rate curve, that yield curve. But more cuts to the short end, which do seem to be coming, would prevent that yield curve inversion again, which is considered to be a bad thing. So what's coming next week? We're going to get the final read on fourth quarter 2024 GDP. It is expected to remain steady, at least the final read for the fourth quarter. This is last year, so almost a quarter behind, 2.3%. We also get a new read for inflation, the Fed's preferred measure, PCE, and we get personal income and spending data. Now that you're in the know about the recent and upcoming financial issues, we hope that you will learn more about how we can help you integrate those issues into your own stewardship. Find out more about how we can help you defund darkness with our biblically responsible investing strategy. Let's shift gears to the stewardship verse of the day, Matthew 19:17. And he said to them, "Why do you ask me about what is good? There is only one who is good. If you would enter life, keep the commandments." So in this verse, Jesus is responding to a rich young man who asked him what good deeds he could do to gain eternal life. So Jesus challenges this rich guy's understanding of goodness. He points out that only God is truly good. No amount of money and no number of good deeds can make someone good enough to enter heaven and eternity with Jesus. Jesus then lovingly directs him to obedience, specifically keeping God's commandments as the path toward eternal life. The rich ruler goes away sad as he realizes that good works won't earn him salvation and that his riches in this life is the closest he will come to true peace and happiness. I wonder if he even realized that he just committed, according to him, his first sin right in the very presence of God. He revealed to Jesus that he loved and valued his riches more than he would a life in the very presence of God, following Jesus and doing his work. This verse points to a foundational principle of stewardship, recognizing that God alone is the giver of riches, and the great amount of riches that he had was just the tip of the iceberg of what God had to offer. As stewards, we are called not to define good on our own terms, but to submit to God's standards and commands. Faithful stewardship means obeying God with all that he has entrusted to us, our time, our talent, our resources, our wealth, our money, our investments, all of it. Just as Jesus told the young man that eternal life starts with obedience, biblical stewardship begins with honoring God's authority and lining our management of the resources that he gave us with God's will. We shouldn't be so hard on the harsh on the rich ruler, though. I mean, how many of us have been in this young ruler's shoes and been asked to give up everything to follow Jesus? Let me encourage you to put your belief that God owns it all and does what he wants with it to the test. If asked today, how easy would it be to give up the deed to your house, the keys to your car, the money in your bank account, your 401k account, everything, and just follow Jesus? Let's commit to do that today. Follow Jesus, whatever that looks like. One small step is to commit to biblically responsible investing. Go to financialissues.org to find out how we can help you do that today. Folks, if you're listening on a station that only carries the 30-minute version of the show, we bid you a farewell and a good weekend. If you want to watch the full show, go to financialissues.org or download our free phone app today. Everyone else, stick around.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
If you don't get life right, you're not going to get all the other issues correct, period. It is the issue that impacts every other issue. Life is the central part of what keeps this republic together. It is the contract that the founding fathers passed down through multiple generations. Life, liberty, and the pursuit of happiness. You don't have life, you don't have a republic. There is a temptation out there right now. And I want to just tell you we must resist it. There's this temptation that we cast this issue aside. How does that honor God? It doesn't. And if it wasn't for preborn, I would be super just confused and depressed because there has never been, in my opinion, a more disjointed time in the pro-life movement. We need a machine to go up against the Planned Parenthood beast. Like, we have to play offense against the pro-abortion forces in this country, okay? We have to play offense. And preborn does it in this compassionate, merciful, godly way that is just so inspiring and amazing.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurSchools.com. That's reachOurSchools.com.
Welcome back to Financial Issues. Hey folks, our phone lines are open. It's Rapid Fire Friday. We've got another roughly 30 minutes, but again, manage your risk. Don't wait till the last minute. Get your call queued up now, 610-363-1110. I saw a call coming in, but I guess they drop. So you'll be the first caller in the queue if you call now. Something very important I wanted to bring to your attention, a new development. So as you know, for the last couple of weeks, we've been helping the Crossroads Kids Club raise money for their ongoing work that they do in the public schools. They have been approved to go into public schools and elementary schools to do an after-school program where, if you're watching, you can see on the screen there, they get to work with kids. So they play games with kids. They get to just meet them where they are. They get to know them. They become a regular person that kid can go to with some of the things that they're struggling with. You know, kids come to school with all kind of things that they're struggling with. Problems at home, problems with other kids in the schools. There's bullying. There's all kind of things that kids are doing that raise their stress levels every day. Now, the good thing about struggles is that they always bring us close to Jesus. And so we want to help get these clubs in schools so that kids have a place to go where they can come face to face with Jesus. They can learn his teachings. They get prayed over. They learn how to pray. They learn how to read their Bible, all these things. I know this firsthand because I visited one of the clubs in my local area, and I saw firsthand exactly what goes on there. And it's a great thing. There's all kind of wonderful testimonies that come from this Crossroads Kids Club. And, you know, one of the things that I and probably so many of you have been bewildered about for the last decades is how much we've seen God taken out of public schools. You know, no mention. You can't thank God that he helped you get through school and become valedictorian of your graduating class. Can't mention those things. We take moments of silence now instead of praying. You know, when I was young, and certainly when some of you older folks were younger in your school age days as well, you probably had prayers happen over the loudspeakers in the morning, and you know, those kind of things are few and far between. I guess there's some places that still stick to those kinds of principles, but for the most part, God has been taken out of public schools and until Crossroads. We have a new development in the campaign. So the campaign was officially over last Friday. We have extended it until tomorrow, this Saturday, because we're real close to the goal of $38,400. That $38,400 would help 100 kids, would pay the cost for 100 kids to go to these after-school programs and hear about Jesus for a whole year. We have an anonymous donor who has stepped up sort of at the last minute, and they have said that if we can raise the rest of the $5,000 needed to reach that goal, just $5,000, if we can reach that goal, they are going to totally match the $38,400. So if this is something that's been stirring in your spirit, make the donation. Do it today, or certainly by the end of the day tomorrow. Help us reach that goal for Crossroads so that more children can hear about Jesus. And you can go to our website, financialissues.org. I believe we got the Crossroads banner back up there at the top. You can click there or go to reachOurSchools.com,
Shana.com.
Thanks, Sam. All right, so reachOurSchools.com is the other way to do it. If you are going to send a donation, if you're 70 and a half and you like to do your giving with your IRA so you can get that money out tax-free, give them a call or shoot Pat an email. Let us know that that's coming so we can make sure that we get it marked toward that matching donation. Also, they can receive gifts of appreciated stock. So if you're going to send that, just let somebody know that it's coming so that we can get it counted in the campaign and reach the goal for that match. So this is what we call funding the light. And that's half of our mission here is to encourage you to be joyful, generous, and obedient givers, reminding you constantly that God owns everything that we have. I know it's deceiving for us when we look at the deed on our house, the title to our cars, the name that comes as the owner of our bank accounts or our 401k accounts. We see our name on all of those places, and it's a bit deceiving because we come to believe that it is ours. But we would do well to constantly remember that everything belongs to God. And we are just managers of the things that He has put under our control. So we want to manage those things well. Part of stewarding well, managing well, is being a joyful, generous, and obedient giver. When you give back to the things that the Lord places on your heart, you are honoring God. He doesn't need our money. It all belongs to Him. He can do what He wants. He can take it from who He wants. He can give it to who He wants. He doesn't need it. But we get the privilege of participating in kingdom work when we choose to give, when we have that free will. So, one last plug. Do it today. Go to financialissues.org or reachOurschools.com. Yep, there it is up on the screen, reachOurschools.com. All right. We answered a whole lot of questions yesterday in the partner conference call. If it's not posted yet, it should be shortly. We'll try to get that up so you can listen to it over the weekend. But remember, the website's going to be down on Monday and Tuesday. And the good folks in the chat were a little bit worried that we might not have a show Monday and Tuesday since the website's going to be down. But the good news is we will. We do broadcast the show, stream the show on our website, financialissues.org, but you can find us a lot of other places too. So, we are on somewhere around 600 radio stations. Before the website goes down on Monday, you can go look at the website and find out if we're on a radio station that's local to you. We also are on podcast. So if you do Apple or Spotify, you can get the most current show. The guys are really great here at the studio of getting that podcast uploaded quickly. I would say less than an hour after the live show is over. Sam, maybe you can confirm that. But
they are speedy. So, it's going to be up really quick.
Yeah, so you can check there shortly after the live show is over, which happens at 8 a.m. Central Time, 9 Eastern Time. So you can check there if you still want to catch live and maybe you want to interact with some of your fellow chat members. Maybe y'all can make a plan to get on over to a social media platform. That way, you can still make comments. You can have your chat commentary on social media. So we're YouTube, Facebook, Rumble. Did I miss anything? YouTube, Facebook, Rumble are all the live places. And then we also have content that we post on X, Truth Social, and feels like I'm missing Instagram. We're on Instagram too.
Well, I don't know if you can watch the full show on Instagram, but we're certainly on there. So you can still follow us there. So I'd recommend it.
Yeah, you can see us on those platforms. But for the live show, it's going to be YouTube, Rumble, and
Facebook.
So maybe y'all can plan for one of those.
There's too many of them.
But, not everybody does everything. So hopefully
diversify, Shana. Diversify. Right?
That is a core principle of our strategy here. So we're diversified on our outlets. Here comes Craig with the Ag Report, and we're going to take a short break. Then we'll be back with the rest of the show. So stick around.
This is Craig Haugard with your Financial Issues Ag Update for March 21st. Well, corn prices were supported by strong weekly export sales. Now, the economics of buying U.S. origin corn is strong, with the U.S. about $20 per metric ton cheaper than most major exporters. And weekly sales numbers certainly illustrated that. The top buyers this week were Mexico, Taiwan, and Colombia. At the closing bell, we had May corn 7 cents higher at $4.69 per bushel. The soy complex was mixed, with soybeans and soybean oil firmer, while soybean meal continued its losing streak. Stronger crude oil supported the vegetable oil markets, and soybean sales were disappointing, although year-to-date sales continue to run 13% ahead of last year, while the USDA is projecting we'll see an 8% year-over-year increase. At the close, May beans were 4 3/4 cents higher at $10.13. Wheat futures took a real hit, with the weekly export sales coming in at a negative number, the result of more sales cancellations than there were actual sales. That, coupled with better weather forecasts for the southern plains, had wheat prices on the ropes. Minneapolis May wheat was 7 cents lower at $6.04 3/4. Kansas City dropped by 8 1/4 cents to close at $5.86 1/2, and Chicago was 6 1/4 cents lower at $5.57 1/4. Cotton futures just kind of spent the day chopping sideways. When the closing bell finally sounded, May futures were 27 points lower at 66.08. Livestock futures were mixed. June live cattle were $2.17 1/2 higher at $205 2 1/2 per hundredweight. May feeder cattle rose by $1.60 to settle at $289.10 per hundred. And we had June lean hog futures 25 cents lower at $96.25 per hundredweight. Costly milk futures proved that Wednesday's bounce was an isolated situation, as prices were down again yesterday, in fact made a new life of contract low. April futures finished 13 cents lower at $16.93. This has been Craig Haugaard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. We're in the home stretch of the program today, and our phone lines are open. And you have waited till the last minute again. So if you want to call, you'll need to do it right now. 610-363-1110 is the phone number. It's okay, though, if we don't get any calls. We've got a lot of questions to get to from the website that have come in, right? Right, Sam?
Oh, yes, we do. We want to get to those right now, Shana?
Yeah, let's do it.
All right, we'll start with Claude. He's asking, there was some chatter yesterday about CD86 being a buyer opportunity right now that it's down. What do you think about that, Shana?
Well, I didn't see the chat, but we agree. It's been on our buy list already, even when it was in a little bit of a higher price. So we think it's a buy. It's on the buy list.
That's an easy enough answer for me. Meanwhile,
Rapid Fire Friday.
Yeah, I like that. Yeah, get them out quick. Meanwhile, Bonnie is saying, I'm in on month 3 of a 6-month plan to move some new money into the market. My date is the 28th of the month, but I've been wondering if there would be a reason to put in more this month with the market being down, more or less due to some volatility. We appreciate your commentary. Again, that's Bonnie. She's age 62.
Great. Sounds like Bonnie's an avid student and follower of the strategy. That's a good thing. So we do recommend a key part of our strategy is that when you're just first getting started, adopt discipline early. So, rather than just going all in all at one time, that's a little bit scary for some people because they think, oh, well, maybe should I wait? Is the market going to go down? Maybe I'd rather wait to get a better price. So we suggest a disciplined approach of taking, 3 months, 6 months, 9 months, whatever you settle on in your mind, and moving money into the asset allocation models over that time period. So Bonnie's halfway in and she's noticing that the market is down and she wants to know if she should accelerate it. I think it's an okay thing to do. Maybe you do 2/6 of the money and shorten your time frame. That essentially shortens your time frame into 5 months. I wouldn't necessarily go all in. We still can potentially see a good bit of volatility in the markets. I mean, there's things that are happening every single day. There are reasons that things could end up going sideways for a little while, or we could see more downside pressure. Just really too depends, not necessarily as much on what the market's doing, but what are the positions that you're going into doing. So maybe pay less attention to the market. I mean, the market's a sort of a barometer for what's happening, but the markets, especially right now, tend to be really heavily influenced by a small group of stocks, only maybe 1 or 2 of which are even eligible for to be included in our strategy because of for biblically responsible reasons. So pay more attention to the positions that you're looking at going into that are on the buy list than you do at the market. But, sometimes the market gives you a key to what's happening.
Very good. And Marcia, or perhaps Marcia, I'm not sure which, she's asking, is it wise to invest your money in more than one platform? Example, Charles Schwab or Fidelity. My dad, who invested in stocks, always told me not to put all your money in one platform. Although the advantage is that you get a better total picture on how your investments are doing, a disadvantage would be that if something happens to a platform where all your money is located, you'll lose all your money. So what do you think, Shana? Is her dad right?
Well, I don't know his reasoning for why he says what he says, but if the sole reasoning is that you're concerned about the platform, something happening to the platform, then I would tend to say maybe not. Is Marcia, is she 73?
I believe so.
Okay, that would mean that her dad has some experience from some really bad things that happen. Maybe even depression level, depression era.
PTSD.
Right, some market PTSD that's influencing that decision. So, I would suggest that, especially if you're looking at the 2 brokerage platforms that you mentioned, those are really big, well-established, well-insured platforms that anything can happen, but I think the risk is low that those platforms would just dissolve or disappear overnight. So I suggest one platform. It's better for record keeping. Marcia, you're at that age 73, so if you haven't already started your required minimum distributions, you're going to have to do that shortly. Required minimum distributions are calculated based on your December 31st year-end balance of your IRA and a formula based on your life expectancy. So if you have IRAs on multiple platforms, that gives you more to track. So there's more chance of missing a required minimum distribution if you have things spread out on multiple platforms, and there's big penalties for missing your required minimum distributions. There's a 50 2% penalty on money that you were supposed to take out but didn't take out. So I like one platform. It makes things easier for management, for performance reporting, like you mentioned, and easier for passage of those accounts to your beneficiaries. So if you have things consolidated in fewer places, it's easier for your heirs to find all of those assets and process all of those assets once you get to go home to be with the Lord. So the additional thing there that might ease your mind about things totally going away is that brokerage platforms are typically covered by SIPC insurance, and that typically covers investors up to $500,000 per customers with certain limits, $250,000 limit on cash and certain other things. And basically that does not protect you from market volatility. It protects you in case the brokerage firm fails and they have misplaced or lost your securities. So I think there's size on the side of the ones that you mentioned. There's insurance. Now, I guess it also depends on the size of your portfolio. If you've got, a lot more than that $500,000, and you consider the risk great that the brokerages would fail, then you may want to take your dad's advice.
All right, very good. Moving on now to Phil, who says, I'm fully retired and following the investment income allocation model in the fixed income preferred sector. Is there any reason not to have a high percentage of that sector in preferred equities versus CDs, given that I'm better off with higher yields? Thanks so much for your help. By the way, he's 66 years old.
Yeah, Phil, so I would agree with you. And what you're going to see with the asset allocation model revisions that are coming out with the new website on Wednesday is that we do have a much higher allocation toward preferreds. In the old model, we used to sort of lump preferreds, financials, and REITs all together. On the last minor revision, we broke out preferreds. We still have REITs and financials together. In the next version that's coming out next week, we're going to break out all three of them. So we're going to give you a little bit more clarity into what we suggest are the right allocations, especially for that income model. So yeah, I'm good with, I would still keep your total allocation per position, so in each preferred, to around 3% or less. You don't want to get too overweighted in any one individual holding.
All right.
One more?
You want to sneak one more in?
Yeah, we can try one.
So this is coming from Fail. He is not a partner. He says, if you inherit a property in North Carolina and you sell the property for more than what was paid, do you still have to pay taxes on the profit? He says, I guess you would call it a capital gain because, of course, you made more on the house than was paid for it, but it was left by your parents. So he's kind of asking, what's the deal with that? What do you think, Shana?
Yeah, so I can give you some general guidance. I'm not an expert in North Carolina law, so you would want to run everything by your tax professional. But generally speaking, you get a step up in cost basis if you were not the owner prior to inheriting it. So if the house was previously titled in your parents' name, you inherited it, let's say, on January 1st of this year, the cost basis gets a step up on the date that you inherited it. So if that was January 1st, the cost basis now becomes not what your parents paid for it, plus or minus any adjustments, but it steps up to the market value on January 1st. So you're probably going to have to involve your tax person in that anyway to talk about how, what exactly is the market value on January 1st. But that would make the capital gain potentially a lot less than if it were what your parents paid for it. So that's the great news. Well, folks, I don't think we have time for much else today. Just a reminder, website down Monday and Tuesday. Work on getting your password saved, memorized, whatever you do with passwords, and the data from your portfolio tracker copied. We are pretty convinced that the data will be transferred over, but just in case, it's a great idea to do that. So, folks, we're going to leave you today. We're going to remind you that God owns everything. The Master's coming back. There's going to be a test one day. We want to help you be found a good and faithful steward of everything that the Lord has trusted you to manage. So, find out more about our partner strategy at financialissues.org. Have a great day of worship and Sunday this weekend, and we'll see you back here, Lord willing, next week for more financial issues. Check us out, financialissues.org. I'm your host, Shana Burt. Tune in for more financial issues next week.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.